What's happening, everyone? It's Wilson, and I'm back with another stock trading video on leverage ETFs. And in this video, I'm going to make it quick, simple, and straightforward on what leverage ETFs are and how they can be pretty useful to incorporate into your day and swing trade strategies. You can follow me anytime on Twitter at itswilson8. So what is a leverage ETF? We've been hearing about these a lot. I love trading leverage ETFs because I love looking at the patterns. I love seeing what is going on with the news around the world and seeing how it can impact a certain sector, especially with all the stuff going on with North Korea, the wars, how oil is being used. If you're somebody that keeps up with news, leverage ETF might be a good thing for you to trade, especially when you want to target a specific sector. So leverage ETF is exactly what it sounds like. Is a leverage fund that these financial companies create, and they move at a lot quicker pace than normal ETFs. Traditionally ETFs are for more of those like retirement investors or value investors that just want to put their money somewhere and they don't want it in their checking account. They want to watch it go slowly. With leverage ETF, this is actually a very powerful type of ticker for stock traders, especially day traders and swing traders, momentum traders, because they move very quickly. Now, leverage ETFs can monitor any type of sector just like the regular ETF can. So you can invest in one in oil, you can invest in one in gas, in gold. Like maybe like as of today, the China tech is growing, so you can invest into a leverage ETF that holds a bunch of shares in the Chinese tech space, right? And leverage ETFs can go at either 2x speed or 3x, and they can be traded at most NASDAQ exchanges. I like trading the 3x ETFs. Leverage ETFs are good for day and trade traders because of the quick speeds and the liquidity that it does. And usually leverage ETFs have a good amount of volume because people are always buying them and selling them. So some of the quick things that you need to know about leverage ETFs is that they go at 3x speed, which I'll explain a little bit more in the next slide, but they can profit you very quickly when you're monitoring a specific sector. So let's say right now I predict that the oil prices will be going up tomorrow massively. Instead of just investing in the whole sector, I can invest in the leverage ETF that represents like a 3x oil speed or like gold speed. And by the end of the day, whatever it is, whatever the growth rate is, whatever the price upward trend is, you will get the 3x return on it. So it mainly monitors the entire sector and not just one specific stock. At the same time, because it's leveraged and it's 3x, it's kind of like trading on margin, right? It's a lot quicker. So you can lose your money very, very, very quickly as well. So it's actually something that's perfect for like day traders or people who just don't have that much amount of time, but they want to trade for that specific day. Leverage ETFs reset every single day. So let's say that the gold price went up by 10% today, then that means the leverage ETF will leverage you up like 3x. So you profit. But then there's no compound effect to it because tomorrow, if the gold price drops, then the leverage ETF will drop as well. So it doesn't really stack on top of each other, and not just because it dropped 5%, then it goes down for the specific day. So leverage ETFs reset every single day, and that's something you have to know. Just because it's doing good today doesn't mean it'll be doing good tomorrow because it monitors the sector that you're trading on a day-to-day basis. Leverage ETFs can be both short and long. So usually for every leverage ETF, there's a counter one that's called short, like 3x short or 3x bear. And that means they're trading against the sector. So they're betting against it and they're hoping that that sector will go down. So there's always one, like for example, like a JNUG who looks at the gold sector that hopes that it will go up, and then there's always a 3x bear or short one about the gold sector that hope it goes down. So usually when you compare both of them, one goes up and then the other will go down in the same exact day. So here's an example of a leverage ETF and its results. Let's just assume right now you put $1,000 in one random leverage ETF, and supposedly that the index itself. So let's say you put $1,000 in gold, and the index itself increases by 5% in that specific single day. After the market closes, the 3x ETF will gain 15% because it's 3x leverage, while the 3x inverse one, so the one that's short and the one that's betting against the market, would have lost 15% because of the 3x. Both types of these ETFs will perform as designed, right? So if you look at this picture right here, it gives you a pretty good example. $1,000, the performance return on day one, if it goes up on the long ETF, you will get a 15% gain, which will put your value at 1,150. And that's a total performance return of 15%. On the other end, if it's a short leverage ETF, you would drop the 15% and you end up at $850, which is a 15% loss. So it can go either way depending on which ETF you decide to invest and buy into. So who are leveraged ETFs made for? I like trading leveraged ETFs. JNUG is probably one of my favorite ones to trade. UGAS, the one that monitors the natural gas, and it's mainly for traders who want quick movement and don't like the slower movement of normal ETFs. It's also for traders who are aware of the trends of the economy. So if you're always reading the news, you're keeping up with the future prices, you're keeping up with how the whole economy is moving, then leverage ETFs might be perfect for you. And it's also pretty good for traders who want to leverage a specific sector without putting a large amount of capital. Because let's say you're buying into like the S&P, for example, that thing's like, it could be up to like $2,000, right, for one share. So with leverage ETFs, it's leverage and it's an ETF fund that holds the entire sector. And for example, buying gold would be just ridiculously expensive at 1,000 something, whereas you can just buy a share of JNUG for like $19 or $20, depending on what the price is when you're watching this video. So here's a short list of leverage ETF ticker samples. There's a lot of them. There's a ton of them out there. If you Google it, I think there's a website called etfdb.com, and you can find over like 70 of them or something like that. But here's just the quick most popular ones that have a lot of volume and they trade very, very often. As you can tell by the name, some of them monitors the gold industry, like this one. The other one monitors the S&P. Another one will monitor the crude oil. And JNUG is my most favorite. I trade this like 5 times in the last half a year. UGAS is currently down right now, but it monitors the natural gas and is on the long side. As you can tell, some of these names include bull stocks, so that means it's always long, and then there's always bear shares where it goes down. So these are some pretty good examples, and you can always just Google them and do a little bit more research. Well, anyways, thanks for watching. If you enjoyed this quick and easy video and you found it helpful, subscribe and give it a thumbs up. Again, you can follow me anytime at iswilson8 on Twitter. Thanks again.